Hello everyone, my name is Tushar Jain and my student ID is AGL3042. Today my topic of discussion is on Appen Limited company, and I am going to compare the data of this company for 2 year data, like from 2018 and 2019. Before starting the presentation, I would like to explain about little bit about the company, what company really do, and what are their benefits for the customer. So, Appen Limited Company is the publicly traded company listed on Australian Security Exchange under the code APX. This provides data that used for development of machinical learning through search and social media energy. So what are the benefits that the company that provide to the customer, or the services that provide to the customer? First of all, they provide automatic speech recognition tool, computer visions, and meaningful and personalized advertisement facilities. And it also provides some other tools to the customer that are chat box, virtual assistants, and demonstrate artificial intelligence. Appen is a very big company which do some outsourcing as well. Nearly 1 million part-time subcontractors are joined with this company. So let's start with the concepts of corporate accounting. So there are basically seven concepts of corporate accounting, which are accounting profit, taxable profit, temporary difference and taxable temporary difference, deductible temporary difference, and deferred tax assets and deferred tax liabilities. So start with the accounting profit. What is accounting profit? Accounting profit is basically a net income of the company that we get after subtracting cost and expenses, as indicated by the journal acceptance accounting principle. Common cost and expenses that are subtracted from revenue are labor, material, and transportation cost extra. So the second one is taxable profit. According to the Stim-Mill-Marian 2009, the term taxable profit is defined as the amount of income which is utilized from computing as much as tax is required to be paid by the organization or an individual which is owed to the government in a tax years. However, the taxable profit is mainly based on operating income. And what is operating income? Operating income consists of dividend income, capital gains, and interest incomes. Yes. And the third one is temporary difference. Temporary difference refers to the difference between the base of tax and carrying amount of the liability and assets on the balance sheet. Then there are some points such as deferred tax asset and the deferred tax liability, which are defined by different authors. According to the dentist, the terminology deferred tax assets are referred to the item of the balance sheet where it can support in the reduction of the taxable income in the future time period. The situation commonly occurs when the organization has outpaid taxes or paid the taxes in advance. So the next one is recognition criteria of deferred tax asset and the liability. Deferred tax is recognized under the IAS 12, which is income tax based, with the respect of difference between the tax base of assets or liability and carrying amount. The recognition criteria for the deferred tax assets is that carry amount of the asset in higher than its tax based or the carrying amount of the liability is lower in tax based. On the other hand, the recognition criteria for the deferred tax liability are that its carrying amount of the asset is lower than is tax based. However, the carrying amount of liability is higher than its tax based. Then comes to the Appen Limited tax expenses. So in 2019, the expenses of Appen Limited was 3,444, whereas in 2018 it was 4,224. Now we talk about the tax expenses same as the tax rate time. What that means? While reflecting to the corporate tax rate of Australia, it is identified to be a 30%, whereas the profit before the income tax for Appen Limited was identified to be 55,000 in 2009, and whereas in 2018 it was 55,954. Thus, on the basis, the tax expenses for 2019 would be 6,517, whereas the tax expenses are not deducted or taxable. This leads towards the addition of the value of 1,817,000 on the tax expenses in 2019. The value 4,819,000 has been deducted by the tax expenses, which thus leads toward the computation of income tax expenses of 3,444,000 in 2019 and 4,226 in 2018. Now comes to the deferred tax asset reports. According to this report, with respect of the annual report of Appen Limited, the deferred tax of the company is reported under the non-current asset and liabilities of the balance sheet for both 2018 and 2019. There are some figures shown in the table. You can easily find that deferred tax increase was mainly due to the foreign current revolution, intangibly and leases. Now, deferred tax liability report. According to the report referred to the deferred tax liability, it was reported as 4,011 in 2019 and 3,549 in 2018. On the basis of above table, it is clear that there are various elements of the tax liability that contribute towards its deferred tax liability. Now, if we like to talk about the differences, there are some differences that I'll like to discuss, which is permanent and temporary difference. First, let's talk about the permanent difference in Apex. While reflecting on the permanent defer in Apex, it is identified from the annual statement of the organization that the income tax expenses was reported as 3,444 in 2019, whereas the income tax paid as identified in the cash flow statement is 3,506. Now comes to the conclusion. In conclusion, the following task is mainly emphasized towards understanding the income tax issue, as it is large subset within the accounting field. The main focus was to understand the concept of taxable along with the analysis the treatment of the tax conducted in Appen Limited, which a public listed company of Australia.